Welcome. Welcome to your doom. We're waiting for everybody to file in. Hey, what's up, man? We're waiting for you. Yeah, you right there. We're waiting for you to get started. And it's another Sunday. Let me take these off. Why is this guy wearing his shades? I don't know. No reason whatsoever. Just because it's weird and goofy, and it's my style, man. It's my way of doing things. So for all of those of you watching on the replay, thank you for clicking and filing on in. Going to get started here in just a second. Happy to talk to all of you. I always like to know where all y'all people are from, so go ahead and tell us where you're from. So I wasn't exactly sure what I wanted to do today. By the way, I do have a video dropping shortly after. I was going to do this later, but my father-in-law's best friend passed away, and we have a memorial service for him to go to. So that's going to take precedence over this YouTube channel here. So I have my video that is going to talk about Store Capital. If you don't know, Store Capital has been acquired, or they've agreed to be acquired by GIC, which is a Singaporean fund, and Oak Street, which, dude, they're from my hometown, Chicago here. Sweet home, Chicago. Ba-da-ba-da-ba-da-ba. And they're acquiring Store Capital. So Store Capital is going to be going away. We're going to get $32.25 per share, which kind of stinks. But fortunately, I had been buying Store in the $27 to $28 range. So I'm going to make a few bucks there. And I'm going to talk to all of you on that video about what I am replacing Store with. So yeah, buddy, Phoenix, I love it. So I'm going to jump right in here. And if you don't know options, I love selling options, trying to get better at it, trying to not be as cute. We did a podcast where I went over some of the risks. Like Starbucks is one where I'm waiting for that to come back down. I had made, I think, like $630 some odd dollars with Starbucks options, and I had a price, average share price of $82. And here we are at what, 90, 91. It was like pushing 93 earlier this week. So in that case, it would have been better if I just held it, but that cash wouldn't have been realized. So anyway, without further ado, I guess. Yeah, so I'm already looking at your guys' comments. All right, I'll get to your comments in a minute here. Let me go through my little presentation here for all those people watching on the old replay. And first, I'm going to share with you my dividend income right here. So let's share the entire screen. You can see, hey, look at this. This is what I get to see. Little inside baseball right there, huh? This is my my window. That's freaky, huh? Ooh. Anyway, people are like, dude, we don't care. All right, here we go. So I share all of my options on my website, dapperdividends.com. And this is just 2022. There has been quite a bit of options that I have sold. I'm going to zoom in here a little bit more. And let me get to the total. A lot of Neo, Starbucks, sold a put to get into Starbucks. And total right there, $2,112.70 is what I have made in options so far. So it's been kind of interesting. This is the first year I'm really keeping track of that. So before we get into the charting, if you've never heard or never watched anything, or charting is completely unfamiliar to you, that is completely fine, because it takes a minute to get a hold of, to get used to it. Now, charting is something that I've been learning about since early 2018. So it's been a few years. And always remember, charting is just information about what has happened. It doesn't tell you what's going to happen. So that's why they say it's more of an art than a science, because it's not exact. And you can put too much faith in the chart and get burned. Believe me, I know. But basically, the Japanese candlestick charting is what I like to use. And every candlestick can be for a minute, for an hour, a day, a week, a month, a year. The time periods can be variable. And you're going to see the chart we're going to look at is the candlesticks. And basically, what you want, so basically, for those of you that listen to the podcast, all it does is it's information about what happened just with the price on that day for that stock, ETF, index, whatever you're looking at. And when it's the body here, you see the body is the closing price and the opening price. Now, when it's hollow, that means the price closed above the open. And when it's filled, that means the price closed below the opening price. So a black or filled candle, you'll see on mine, they're red. So a filled candle means that it is bearish. It was a bad day for that price movement. Unless you're short, it was a good day. And the hollow candle means that it was a good day because the price closed. Unless you're bearish, then it was a bad day, inverse. So, and basically the tail just tells you the highest that it went and the lowest that it went. Now there's all kinds of different, I think this site shows them. We're not going to get into it, but just, Marubozu. People look at these to try and predict what's happening. There's dragonfly candlesticks, bull hammers, bear hammers. We won't get into all this, but just be aware that it's a whole thing that you can get way, way deep into. So let me take a sip here. I like stockcharts.com. Now I'm cheap and I don't pay for the ad-free version. So please, I hope I'm going to be able to get through this without some major disruptions from ads. So we'll see. I'm going to show you how I set it up first. So let's start with JP Morgan Chase, because I sold a covered call and I played the resistance line. I should have stuck with it. Got a little bit greedy, but here we go. So let me see if I can make this bigger. This is what there's my first ad. You son of a gun. All right. So this is what we're looking at with the chart. So remember, I just blew it up. I'm going to show you how I set it up first. So we scrolled down. Again, this is on stockcharts.com. And instead of the logarithmic, I can't say it. I like the price labels on the stock instead. I'll go 3 simple moving averages. So this is obviously for those of you that are beginner, it's just the average price of this parameter. Either 50 can be, again, minute, 50 day, 50 week, 50 hour, whatever you want. But we are currently on the daily right here. So you see the period is daily. And maybe I should make this over a little more. Oh my God, look at this. Here we go, everybody. The fumbling and bumbling has begun, right? All right, we got to change that again. Let's get rid of that. All right. Yeah, of course, there's never ads. Sometimes it's weird. They have no ads. All right, so price label, the second one, we double it up. So 100, and then because I do the free version, we're going to go to 200. So that's going to be your 50-day, 100-day, and 200-day moving averages. Now, the indicators, these are like price oscillators. There's so many of them. You can see all the different options right here. But one that I had learned to use that I like is the CCI, the Commodity Channel Index. I'll just show you a little bit about it. We won't get into the philosophy of it. We want that below because it was on RSI. So you'll see this will shift to the bottom, which is why I moved that below. And oh, I should have did an ad blocker, right, everybody? But just ignore the bottom there. The MACD, I'll set these up first the way I like it, and then I'll just briefly touch about those two. I like the relative strength index to be on the bottom, and then you hit update, and this is basically going to be, so basically this is going to be my chart. You know, sometimes these ads are on the sidebar, but you know what? We're frugal here. It's okay. Just go with it. Go with it. And I know I'm talking to you and not paying attention what I'm doing here. Okay, so each of those indicators, remember the CCI, the MACD, and the RSI, these are just oscillators, and they show you kind of changes in movement and how quickly or rapidly something's moving up. And these tell me a lot. If you don't do this, this probably looks Greek to you, which is completely fine. So up here we have the CCI, and the main thing that I want to point out is when it is below this negative 100 line here, where you see it's brown, that means it's obviously been in a downtrend, and it's ripe for a reversal. So every time that it pops up above the negative 100 line, the price has moved up and is likely to continue moving up. This again is JP Morgan. So you can see if we go back, remember, if we look left, the chart leaves clues. Again, not indicative of what's going to happen, but what can likely happen. So we see it moved up above the negative 100 line here. And if you follow it up, price moved up. So if you're doing things short term like this, I should have prefaced it. I think charting is great, fantastic for short-term price movements. It's not going to tell you anything about how a stock's going to perform over the next couple years, really long-term. So this, again, keep in mind, I like to use for very short-term price movements to see where the stock is likely to go in the short term. So every time it pops up over negative 100, you'll see the stock has a move up, but it got rejected and went down. So a lot of times people will wait for it to pop up, set a few bucks higher and trade. And then there's times when it just pops up and it goes green here, which is above the positive 100 line. So that's obviously what you're waiting for, is for that big move. And one last thing to point out is, I'm not going to draw on this because that's going to open up a can of worms. You see these peaks or these valleys down here, they are getting lighter and lighter. They're not going down as much. So it's kind of an upward slope, which means that the trend, I guess the sentiment means that it's potentially shifting. And you see JP Morgan did have a big run up from 114 to 131. But again, we don't know because it was making lower lows and lower highs, which is definitely very bearish. And the last thing about CCI that I want to point out to you is that if it goes way down below negative 200 or way close to or above positive 200, it's very likely that there's going to be a reversal because it's like the pendulum. It swung too far. So we see when JP Morgan, it shot up from 114 to 131. And you can see this, I'll zoom in, this green hill right here. It's starting to decline. And even as price was just starting to taper off, it's again, it's not, you don't know for sure what's going to happen. And it's really easy to look backwards at a chart and think, what's going to happen, right? But anyway, so this is a lot of time traders will get out, that use the CCI. When they see it, especially cross below the negative 100, they will sell. So in theory, to close it off with the CCI, when it popped above negative 100, people would have bought here, traders. And then when it closed below or started dropping below the positive 100, people will sell. And again, right here, great example. When JP Morgan went down to $106, the CCI was down below negative 200. And a lot of times when you play around with this, you'll see that there's a quick rebound. So this was a great short-term trading opportunity. And I did this with Unilever when they were rumored to buy, or they announced they were interested in buying GlaxoSmithKline's, the consumer health segment. So I think it was down to negative 300. It was in February. So I did a very quick in and out. I made a couple $100. And actually here, I can show you. Yeah, Unilever in January, that's when it was. I sold a $50 call. I made $258. I think there was two of them that I did. And then I sold it to close it out. Anyway, so I used that to make a few bucks there. And then let's see if not too much into this can be confusing. The MACD, they call it, the moving average convergence divergence. All this is you can change the parameters. This is kind of the stock footage of what they use. So the black line is called the fast line. The red line is the slow line. The period is 12 and 26. And the way you can look at this, and then the blue bars is the difference between the two. So if you subtract 0.102 from 0.225, you get 0.123. And this is again kind of the difference. And you can see how moving averages are starting to shift. I may be butchering this, but the thing you look for here is when the fast line crosses up above the slow line. So when the black line goes above it, it means it's converged. I don't know if I'm saying that right. Anyway, so it's changing. And what you want to look for is when it's crossing above, there's probably going to be a movement up. which it did here, and it sometimes takes a few days, and there was a slight run up there. But anyway, when these, again, like the pendulum, when you see these blue bars getting too far apart, they have a tendency, like a rubber band, to come back. So if we look up, that's when that huge move was. So basically on the CCI and the MACD, when old JP Morgan was here, if you're a trader, it was probably telling you it's time to get out. Looks like it's going to take a nosedive, which it did. And then, like a pendulum, again, it was too far to the downside, and it started coming back. Basically, oh my God, brain fart time, brain fog. Basically, a reversion to the mean is kind of what it was doing there. So again, this is all short-term stuff, and looking for, there's times when it'll bounce off of the slow line, the red line. And and then the last one is really simple, the RSI. There's a lot of ways to say what the relative strength is, but if it's too far down, if it's by the 30, it means it's a really weak performing stock. It's underperforming, I think 30% of the market is the way to say that, or other stocks. So it could create a great buying opportunity because it means there's room for it to run up, or in the short term. And likewise, if it's around 70, which also means oversold, overbought. So the 30 line is oversold. It means so many people have sold off. It's probably time that it's going to start coming up. And if it's around 70, it means that it is overbought. So if everybody's buying, well, it can't go on like that in perpetuity. So basically, there's not going to be a lot of buyers left when it's up around 70. And a lot of times you'll see when it's on 30, it'll come up and down and blah, blah, blah. But it can be down for a long time and just languish sideways. So again, these are the three indicators I like to use. And it tells a story of what happened and what the overall sentiment is in the market. And then the last thing I will say about this, when I'm selling options, if I'm selling a call option, I'm looking for when that stock might hit resistance. So it's basically just where in the past, or where it looks like it's going to have trouble going over. A lot of times you will see stocks hit resistance around this green line. That's our 200-day moving average, which for JP Morgan is $131. The 100 is 117, which actually around here, it kind of had, again, this is looking in the past, but it had kind of broken through and it died out. And then the 50-day is the blue line. So that's a lot of a more recent, there's different weighted, you can weight these, and there's so many ways that you can do this. This is just really basic and quick. But what I like to do is look in the past, look left for clues where we might find support or resistance, and also gaps. So if you're going to follow me on Twitter, you'll hear about gaps. A gap is just in the movement. So I can do this and not muck it up. Yeah. So right here, you see there was a gap here. Now, a lot of stocks gaps usually will fill some point in the future. This means that this opened up way down, way down. So there was some gaps to fill. And if we look left, we will see that it ended up filling right here, and then it went back down. So sometimes gap fills can be resistance, meaning that traders, and it's kind of like a self-fulfilling prophecy, that if there's a gap right here where it took time to get there, I mean, each one of these candles is a day, remember? So it took quite a while to get there, but that gap did fill, and it's almost exact. If I was slick and had a charting tool on here, which I don't want to open up, but draw a line in your head, follow me, you'll see it's right there. So resistance, meaning it had trouble going over there, was that gap fill, kind of self-fulfilling prophecy. And then it went down. But also, again, a lot of times traders will use moving averages as resistance and support. So I had sold a $120 covered call for JPM right around, what was it? 1, 2, 3, 4, 5, right about here. It had started going up. And when I was looking at everything, was telling me that the sentiment was shifting. It was going up. And I think I had pegged it at right here because it had hit resistance at the 100-day moving average, this red line, when I sold it. So I had pegged it that it was probably going to hit resistance somewhere in this area, which to me looked to be about 120. And again, I got a little bit cute, got a little bit lucky with the CPI number, with the CPI print that worked in my favor, but I ended up buying it back. So, but you can see it went all the way to 121.55, and yeah. So again, not guaranteed what's going to happen, but also we want to look for clarity in what is happening with the chart. So you can see this cluster recently right here. Look at that. It is just completely sandwiched the last 1, 2, 3, 4 trading days, right in between the 50-day and the 100-day moving averages. It has just traded right in that range and closed in that range. So it's kind of indecision, and it can be a little bit risky, meaning that the market right now doesn't know, as far as JPM is concerned, what it wants to do. So until we get some clarity, it might be best to see a move, a strong move to either the downside or the upside. And let's see if I can do a quick prediction here. Looking at my charting, it's really, really murky. Getting my crystal balls out here. It's very murky what is going to happen with JPM. Everything is just right in the middle. And if you wanted to play it safe, you wouldn't do anything. And I likely won't do anything until I see like a move down or a move up. And yeah, again, that's a really quick crash course in that. I'll put in one more. One of my favorites would do PepsiCo. Again, on the daily, this is just for selling options. And PepsiCo, every stock tells a different story, of course. Yeah, also, this is something you want to look for too on the CCI. See the peak here, way above 200. That's pushing 300. And then this peak is not as much. So when you see these peaks declining, it may be a good time to get out. And sure enough, PepsiCo went up to that 179. And then the CCI was telling us it's time to get out. You don't know for sure, but if I was psychic, I mean, if I didn't care about Pepsi like I did, and I'm not planning on holding forever, this would have been a really great time, making new all-time highs once again. And just everything, you can see the blue bars on the MACD were pointing down. Look at that. See, what did I say about 70 line being oversold or overbought? It's overbought. So it's having difficulty finding new buyers to push it up. So it was completely bumping up against the overbought line and before it started coming down. So yeah, and of course it had been making higher highs and higher lows, which is really bullish, but it just hit that peak right here. And now it found, oh geez, we're still going down. But last thing I'll show you is you want to watch the CCI here to start peaking up, but it's still in a bearish trend because these peaks are going down. They're not going the upper way. So it might be down for a little bit, would be PepsiCo. And I'm going to end it there because I'll just keep going on. And I don't know what you guys are saying. So stop sharing this. And I would love to know what you guys are all thinking. And yeah, that was a lot. So 23 minutes. Hey, we got through it. Let me take a sip here. And yeah, I see it right down there, Steve, with GIS. I'll do that. Let me see. Use my I got to share my screen. Oh, for Christ's sake, I didn't even share the options. The options. I'm going to give you one little tip here about options. So let's see here. This is an options chain for PepsiCo. This may look completely foreign to some of you. The 16th, this is already gone. This will update on Monday. But if we focus in on the 23rd, the gray or the yellowed box here means that these are all in the money calls and these are all in the money puts, and the whites mean it's not happened yet. But one thing like Jeremy from Dividend Stockpile and I talked about were so I wanted to see the exact price of Pepsi. 166.97. So we'll call Pepsi at 167 basically. So this is Friday. This is next Friday, the 23rd. If I were to sell a 170 covered call, so do I think that it has, please work with me, please. There we go. I'm trying to do my fingers and get this more. Anyway, so it looks like sometimes in the past it had found support at 170, which could be sometimes future resistance. And I think it's below all the moving averages. I think it could be going a little bit lower, although it did end the week. That's a bull hammer, I believe, because it went down, but it was the buyers came in and pulled it back up. So 170 could be a good target. Sometimes whole numbers, people get, traders get hung up on whole numbers. So 170 might be interesting. Now, right now, $78 as of Friday. Depending on where it opens up, this is going to change on Monday. But if I were looking, pretend this was 2 days ago on Friday. So if I sold a $170 call, we're going to look right here on the Greeks. So this is one fun one. These have all different kinds of ways of being used, but we're going to focus in on the call Greek here, which is delta. So delta is at 0.266, call it 27. So basically what that means is this has about a 27% chance of hitting 170, or in 27% of the time it would hit 170. Again, not guaranteed to happen with this, but the higher this number is, the more likely it is to close in the money, and it would be called away. Or if you were buying the call, it means it has a 26% chance of hitting. So the higher that goes, the more money you will get in premium for the options. Again, if your head's spinning from all this, understandable. And I may do a video on this sometime, just to be not so much ahs and ums and oohs. I don't think we had any oohs yet, though. No oohs yet, except for that. That was the first time. But anyway, so if you look at that, we'll look at one more, and then I'll put for you, Steve, up there, put you GIS. Let's pull one that's really in the money here. 157. It's probably going to be a pretty high delta. Yeah, 1. So the highest it can go is 1. So basically, it's a 100% chance that this will close in the money if you bought that, and consequently, it's going to be expensive. The ask is $10.05 a share, so $1,005, because it's really likely to happen. So that's that. Let's end it there and go and put GIS for Mr. Steve up on the chart. So I know this one was probably a lot. And General Mills. Let's see what the old General's doing. All right, let me look at now this right here is really, really bullish. We have let me zoom in a little bit more. Whoa. So you see on the CCI, it went way down below -200. And that's interesting because it had dropped from 78 to $75. Looks like it could be a good buying opportunity. And the peaks down here, the valleys, are less and less. And it got rejected when it went above the -100. And right here, it is going above. It has just crossed over, which the last time it crossed over, it shot up from 64 all the way to 76. But again, you can see how this started coming down on the CCI. And sure enough, it was, even though the price was still rising, it meant sentiment was shifting and it was weakening on the CCI. So saying like, now might be a good time to get out. You could see it was kind of stagnating here. It had a lot of long tails, and then it did come down. But yeah, right now it's poked up. So looks like sentiment's coming up. And I think, let's see, strong. I think we might hit some around 75, not 76. I think it might hit some resistance at the 50-day moving average. And after that, man, I don't know. I think we're clear till 77-ish. But again, anything can happen. Nobody knows. Last one. And the RSI, though, has been trending down. So that's kind of interesting. The MACD is starting to contract, meaning it's starting to climb up. So I think that, and this 45. So I believe General Mills right now is only doing better price-wise than 45% of the market. So you know what I don't like about this? I can't see you guys' comments right now. So I'm just like talking out there into the atmosphere. And yeah, All right, so let me go through these. This was a long, and I'm still learning this, guys, and let me know if that gets. I don't want to talk for 30 minutes doing that, but and this is what I kind of feared, like doing something like this. Like I literally could probably go on for another 2 hours with this, just sharing all the stuff I look at and experiences, and every stock is telling a different story. And let me get caught up here, everybody. I'll just say what's up to all you people that said hello. And let's see. Oh, here we go. Kevin, what app showed you the total option gains for the year? No, that was my website on dapperdividends.com. I fill that out every week. I just do that by hand. I set up a table and I've been running that. So that's all me. I wish there was something like that to make it that easy. Good. You know what? I think that's cool. Like Camare saying perfect video timing. Yeah. And again, I've had pretty good luck with this. I wish I would have held out on the JP Morgan one, but as you know, I don't know, some of you, Caitlin and I were kind of talking on one of the, I don't know what the JPM call community post I did. And she was saying it was pretty ballsy, which it was, selling a covered call with the CPI print coming out. Because if that was the other way, dude, JP Morgan might have went to $125 a share, something like that. And I would have been way, way out of the money. And obviously with my call, I'm limited on the upside. So something I think I might start doing, because I get greedy, I want more money, right? Is trying to look for something that's a lot further out of the money and just taking that lower option premium. But that's the risk reward. You're not going to get as much option premium the further out of the money you go. So if JP Morgan's at 117 and you pick 120 for an option that expires 4 days out, you might get decent. But if I go 125, instead of getting like $80, I might be getting like 10 or 15, which is still good. But it's just that thing I'm struggling with. I want to be greedy. Like I want more money, but then we see something like positive news and now it ran up to 124 and I'm like, but that's one of the risks you deal with options. And I'm sure a lot of you know that. So, yes. Oh yeah, Steve. Launching early. Oh, sorry. I mentioned it quickly. My father-in-law, his best friend, passed away a little while ago, and we're having the memorial service for him now. He lived out in Arizona, retired out there. So that starts at 1:00 my time. So as soon as I'm done with this, we're heading over there to be part of that. So yeah, it wasn't somebody I knew very well, but I had met him several times, and he came to our wedding, him and his wife. So we're obviously going to go pay our respects. And really cool. He was a fun guy, like a big guy. Really big guy. They called him Tiny. He didn't want like a sad memorial. So he said he wants a celebration of his life. And I think that's really cool. That was kind of his thoughts he conveyed. He's like, I just want to get together of people to, just remember the good times they had with me and have a few drinks and some food, and don't be sad because, we're all going to be there one day, but just, come together and, remember who I was. So yeah, that's so we'll see. He wants like music played and like if how upbeat can it be at a memorial service? But he was a fun guy, and it's just so fitting that that's what he wanted. Let's see. Yeah, I don't understand charts and options very well. So by Divo Jeppy, you know what, dude? I love this Maximino. I love that, man. I like to get in it. Like I have fun. I really like being in there looking at it. And it, sometimes it doesn't always work out, but yeah, if you have no understanding of charts or options, it's taken me a while. I started learning about this in early 2018, and absolutely, buddy, like buy Divo, buy Jeppy, buy QYLD, buy a covered call ETF, but always understand with those ETFs, you got to at least look at the underlying, because if it's all tech, like I think, right, QYLD is, you're basically buying the underlying stocks. So if it's all tech and we're seeing a tech wreck, they're going to have a really hard time selling covered calls. And people aren't going to want to buy and hold on to that ETF. So it's always important, which is why I like Divo, DIVO. They look to sell covered calls on like Procter and Gamble, Home Depot. I think Pepsi's in there, just the real big blue chip companies. So they're buying those and then doing basically what I'm doing on a super small scale. So yeah, perfect. I love that, man. Dabbled $600. Yep, Kevin. It takes a while, man. And again, there's that risk reward. Like I said with Starbucks, that I had $82. It got called away. I was playing the resistance line. It was like at 83, and I sold a put for 81, I think, because I wanted to be cute and buy back in $100 cheaper. And it never hit, and it's just been going up from there. And then I sold some other stuff, consolidated into JPM. All right, you guys are talking about other stuff. I want to get caught up so I can answer you guys quicker. Oh, yeah. You selling call options in this down market. It's tough. The best time to sell options is when the market is moving sideways, because if the market's going up, there's a strong likelihood that if you sell a longer option, you're going to get more premium, but there's more time there for things to play out, which is why you're getting more premium. And it really was Jeremy from dividendstockpile.com that got me into selling the weeklies. So I do sleep a little better. And I think that's kind of what we have to do with our portfolios. Like if you're not sleeping well at night with your holdings or something you're doing, well, sell down until you can sleep well at night, or stop doing the things that don't allow you to sleep well at night. And yeah, it's tough. It's tough. And perfect example is me with Intel. I sold a cash secured put on Intel. I had done 2 of them, I think. I could look at here. You know what? We can do this. Oh, I got to share come on, everybody. Let me share my screen here, and you'll see with Intel where it kind of went askew. All right, here we go. All right. The first Intel that I sold was right here in April. I sold a $47 put on Intel. Okay, that was the first one. And I sold that for $22. Let's see. It did not hit. It expired worthless. I couldn't read. I'm like, what happened? Oh, right there, dummy. Expired worthless. Well, we won't highlight. We won't highlight that. He's playing around now. Yeah, so that one expired worthless. So then I did it again next week. I sold a $47 put for $60, and that one was expired with the shares being assigned because I didn't buy it back. So it expired in the money. I was assigned the shares at 47, and then the next week I was like, okay, I'm going to sell a $47 covered call and see if I can get out really quick. See, I would have made 22, 60, and I did make 53 on that. So I got paid $53 for that. And then the bottom fell out, and basically Intel has not stopped falling since. So that was in April 19th, the day before my birthday. And I do share a birthday with Don Mattingly and Adolf Hitler, unfortunately. But look at that, April 19th, the next option I was able to sell on Intel, it had a bit of a rise. Dude, July 27th, I sold a $42 call because I wanted to get out. Remember, it had been down and languishing, and I was like, you know what? I will get out with just a small loss. And I got $44 for that. It, of course, didn't hit. It came close, but it didn't hit. And I think that was the last one in July, August. That was it. So right now, I could factor in those. For Intel, the options premium I've received, but I have a $47 cost basis. And you see when I made like 53, 22, that is all can factor in and come off of that. But basically, I'm way down. Intel is at like 28 and change this week. I'm down almost $2,000 on Intel, but it's a turnaround play. I've actually just started adding a few more because I don't know how much lower it can get. That would be a fun one to throw up on the chart. I'm not throwing up, but yeah. So good question. And it is tough selling covered calls in a bear market. And Steve likes the RSI scores from Investment Business Daily. I don't remember that, but Yeah, that must be what they did, and I'm sure. I don't know. I've never seen that. Let's see. Let's see. Did GIS good? Yeah, guy. Always be if you don't know to sell an option, or you need to sell a covered call, you need to own 100 shares. But to buy a put or yeah, I guess it's selling a cash secured put is basically the opposite. So in that case for Intel, I had $4,700 of cash in the account, and I told somebody I will buy 100 shares of Intel from you for $47 a share, and that's what they paid me because it was like downward price protection for them. So if Intel by week's end dropped from 48 to 30 bucks, they're covered, dude. They're still getting $4,700 total, $47 a share. And I'm buying them for $47 a share, even though Intel's worth 30. So that's some of the risk that you play with options. But yeah, always know there's risk with everything. Anything you do, even buying Microsoft and holding Microsoft or buying the S&P 500 is inherently risky. Equities are always risky. So glad you guys enjoyed this. And yeah, Harsha again, good. Delta called on, is that Welltower? WLL? Yeah. And I don't know. It's interesting. I'd like to, here we go, Bill. Yeah, he struggles chasing premium, but it's doing better lately. For me, I'm licking wounds trying to chase premium. And sometimes I wonder if I'll ever learn. But it's hard, right? Because it's hard. Here, let me show you guys with Pepsi what I go through and what I struggle with is yeah. Let me go back. So right now we'll look at next week, and again, these numbers change hourly, daily. This is as of Friday. Let me make this bigger just for the calls because you know me, I hold 100 shares of Pepsi, so. This is in the money, right? And I could look and say, like, I don't think Pepsi's going to go past 170 or close above 170 on Friday, $78. But if I want to play it safe and go to 175, which probably, and this shows you the interest, right? This number here, the open interest and the volume. So this number here is showing you how many people, I guess, were interested. I don't remember how they figure that out. But yeah, so for me, I'm like, ooh, like I could get $78 from, well, that's the bid. That's what the ask is, and that's the bid. So sometimes I'll go a little bit below the ask to get it going because people will take it if it's below that. But yeah, so I could say $170, and there's a higher likelihood, right? The delta was what, 26? Yeah, so the delta is 26% chance. But then if I go to, which is still pretty good, right? Good Lord. This guy, where are we at now? We're at the 30th. He's scrolling all over the price. Somebody stop him. So, but if I were to do 175, dude, 10, 11 bucks, I'd be getting $10, which I pay 65 cents to Schwab. So I always have to deduct that, but it's probably going to be under 10% on the delta. Yeah. So 0.05%. Mess around with that. There it is. So the delta. So basically rounded up, there's a 6% chance that on Friday, this coming Friday, PepsiCo will be closing above $175. And at that time, it's almost like, maybe it's not worth it. So that's kind of what I struggle with and what I'm, chasing that premium, man. Yeah. So we went through, nice memorial. It will be, I think so. Yeah, I can't believe the time, guys. What are you buying this week? Let me know. Let's hear. I want to hear from you. Looking to sell HON. Is that Honeywell? 923. 100 shares of Pepsi in terms of options, all that. Yeah, I've done a few, and one of them was super close. It was $175. I think I sold for $18 because it just started running up. And it was one of those, I was on a job and the market closes for me at 3:00. Dude, at like 2:58, it was flip-flopping. It would be like 175.12, 175.18, and then it would go to 174.89. I was like, ah, dude, there was some serious heartburn on that one. I was like, what did I do? I'm going to lose my Pepsi shares for, uh, but in hindsight, and I was telling my wife this, if I was psychic, we would have had to pay a capital gains tax on that because our average is like $150. But I could have sold cash secured puts. I would have got back in, but still, I was just like, oh no, I'm going to lose my shares. I worked 2 years to get for $18, but it ended up closing at like 174.89 or something. It was ridiculous. But with literally like 2 minutes to go in the market, I was just glued to the phone and I was like, I had a thought like, this isn't what I want. Like, I don't want to be, you know, just like heartburn here, like watching this. Which is why, at least if I were to do a 175 and it's 167 now, the chances are so small it's going to go there. But if it does, you're going to at least get hundreds of more dollars in terms of it running up. Um, yeah, I haven't. It's funny, but I mean, I could, turn it into a video, right? I'm trying to think of the face I do like this, and put, I just lost all my shares of PepsiCo, but it sounds like they're gone. I would just sell cash secured puts but you know what? I might not do that anymore. And if I do, like this week, I might just do the 10, $15 for something that's like under 10% chance of running out. Yeah. Let's see. Buffett of Pep stock. They do have a little bit of a high payout ratio. Pepsi does too, or Coca-Cola does too. Yeah, birthday of Don Mattingly, Adolf Hitler. Yeah, it is. It is Ray. Yeah, one guy. It's unfortunate. It's so unfortunate, and it's funny. My last name is a German name. I'm not even German. It's my estranged stepfather's name I took when I was 9 years old. Anyway, company stock equity awards base cost basis for stocks sold with capital gains in some program. Holy smokes. Let me think about that. So you're asking if you had awarded stock from a company. Okay, where's Caitlin when you need her? That might be too much for what we're doing here. So you're awarded stock and you have that cost basis versus stock sold with capital gains in some program. Man, I don't know, John. I wish I had an answer. I would probably have to sit down and think about that. And off the fly, I don't. If anybody that's still watching does, we'd love to know. Let's see. If you paid taxes as it was awarded, and the time you go to sell it to avoid double tax, that sounds like a question for an accountant or a CFA, of which I'm not. This is just my hobby, man, sharing what I'm doing. Somebody watching might know. I really don't have an answer on that. Yeah, man, I apologize. And again, if somebody, no, it's not off topic. That's good. I just really don't know. And that would be a good question to find out. ESPR. Okay. Big result coming out. I don't know what that means. 1/20/13. Maybe me 2023. I'd be curious to know what's the result. Care to share? Yeah, Bill's selling the 175 on Pep. Yeah, you're right. Right. 500 a year. And that's something I'm going to probably start doing and it's funny. I say this, but as I'm looking on my phone, my eyes start going up and up to the higher premiums. And then I look at the chart. I'm like, those probably won't go over 170. Right. But you're right, man. If I did 10 to $15 every single week, like that's nothing to sneeze at. Just looking for those low deltas. And yeah. Let's see. I have done that in the past. I thought about doing it with JPM. I've done that. I did that a lot with Neo back in the day because I wanted to get out with some money, and then the EV craze started going crazy, and I kept rolling that forward. But it started getting expensive, and yeah, I had sold like to get more premium to cover, I was selling out like a year and a half. It was crazy. Yeah, so I've done that before, but I haven't done it selling the calls that I can think of. And we were Pep getting called, Starbucks, Lowe's. Yeah, it's funny. I did work hard, but like I said, I would be able to get them back. Um, if it would have closed at 170, and look what happened. We're in what 167 now, and I would have had them called away at 175. Part of me did think when it was at 180, I was like, I should just sell here because it's probably going to be going lower. But it's just that's trying to time the market, and then I'd be worried, and I don't want to be worried. But yeah, it's just something we have to think about with that BAC or Intel, right, right, and that's the one. So we're kind of getting into like the wheel now. So where you want those to get called away because your cost basis is really close to the current share price, but then you're paying short-term capital gains, so that has to be factored in. Yeah, but I'd rather pay taxes on a gain than nothing on a loss, I guess, or tax harvesting. But yeah, as you saw with Intel, I was trying to get those called away. I should have went a little more aggressive, and I think if I remember right, it closed like a buck or so below, like a buck and change below that 44 or 2 I had it at, whatever, 42, I think. Yeah, how would you we won't get into that here. You're basically you're buying the contract that you're short back, but then selling another one that's longer out and maybe for more premium or a higher strike price. So you're not going to get them called away, and it gives it time to hopefully close below that and expire worthless. But a lot of times you're going to have to pay money for that. So it would be good to avoid, like in my case, if I was going to pay a big capital gain, then it would probably be worth it to roll it forward. And even if it costs me, 20, 30, 60 bucks, whatever it is, it might be worth it in that case. So let's see. Average down on WBA. Yeah, I haven't really been paying much attention to WBA, Steve. And oh, buddy, yeah, that's what I'm doing. So that is great. If you go back or you go to dapperdividends.com, just click on that. You'll see. So I have the 3 accounts. I have the Roth, which is obviously retirement, the self-directed IRA, and then the bridge, which is a taxable. And yeah, absolutely. If you're selling options in a retirement account, it's beautiful because you are not paying any, you're not paying any capital gains. The only thing I'm paying is I do this in Schwab. There's a 65-cent fee every time you buy or sell. But if it expires worthless, there's nothing. So that's something I have to factor in. But again, if I'm getting 80 bucks, what's 65 cents? So that's why you'll see a lot of those being a little bit 65-cent lower. And yeah, it's ideal, man. And that JPM, that's in the retirement account. So even if there was a huge capital gain, wouldn't matter at all because it's tax deferred, right? In that retirement account. So yeah, this one, it's funny. 16 people watching. Thank you for those of you that are. And I had a feeling this wouldn't be crazy. And next week, I might look for something a little more. We'll have fun with it. Maybe something a little more. I don't know. I don't want to say clickbaity, but like we do it. We all do it, right? We have to get people watching. It's like this crazy surprise face. 3 hot dividend stocks to buy now. And it's sad, but it's the game, dude. It's like, don't hate the player, hate the game. And I think it's something you're going to see me doing a little bit more because, hey, it's more fun when we got more people watching and more lively debate. So it's going to improve. And dude, I love all you guys for being here. And Kevin, I know he's got a YouTube channel. Definitely check out Kevin's channel. It's fun, man. It's a learning game, and I'm still struggling with thumbnails and titles, and it's just growing and learning and all that. But yeah, I'll go 5 more minutes. Anybody got anything you want to say? Oh, Kevin, yeah, Kevin, man, it's stick with it, buddy. But you'll learn. I did take a video creators class that I'm still not applying a lot of it because a lot of times I get so focused on the next video and what I'm going to do that I don't know. I don't stop to think about like, okay, what's working, what's not working. That's why I stopped doing um, the Berkshire. Well, before it was Berkshire, the Warren Buffett, when it was just BPL, Buffett Partnership Limited. Uh, it just there wasn't a lot of demand for it. I mean, I had thought like, wow, people might want to hear somebody read this when they're driving, but it's not. You know what I mean? Like my time is limited here with my family, so you can understand this, Kevin. Like you want to do stuff that's going to get views, and it sucks. I've been there. It sucks putting out a video that gets 80 views, and you spend like 2 days working on it. But it's all that. Dude, it's human nature. What do people want to see? What are people looking for? And, so don't hate me when you see me do a little fireball. I'm going to hold fire or something and say like 3 hot stocks. You got to buy these dividend stocks right now because we have to do that. But yeah, so again, hate the player. No, I hate the player, not the game in the mixed up bizarro world. Oh my God. Oh, by the way, I have merch that's I don't know. I'm not too happy with these spreadshirts. I know I shouldn't say that. I'm going to complain. Like this guy here is not completely centered. It's a little bit off, you can see. Like where I can't do this backwards. That line right here, it's a little bit off. So I'm complaining. I think they'll send me replacements. Get some free swag giveaway. But yeah, I don't know, learning that. So yeah, and if you guys, hey, you know what? While we're still here, you tell me right now, for the 17 of us that are still here, what is something that you would love to see me talk about? What is something, video topics, anything? Throw it out there. Just what would you like to see? I'd love to know that. What do you not see on YouTube channels? What do you see too much of? What personally do you right there watching this right now? Just share it. I want to hear. Fireball. Yeah, you know what they teach us? So they say when you're making the thumbnail, it's supposed to stop people from scrolling. So it's like a showstopper. It's supposed to be a scroll stopper. Obviously, you guys are going to click on my stuff, but for new people, like when they're scrolling and it has to be quick, like if you put too much on the thumbnail, like people's brains, it's too much. Like they say, people's brains have to be able to just get it. Like, whoa, what's that? Like in a second. They can't be like, let me sit here and figure out what this thumbnail is about. They're like, no, there's not enough time for that. Yeah, it's like somebody just left. I'm talking about thumbnails and they're like, I'm out of here, guy. But anyway, so this is a little, those of you that don't create, you can get in my mind a little bit with this. I'm trying to get people to stop scrolling with the thumbnail, and then the title is supposed to be like the counterpart to that. And you're not supposed to be redundant and say the title on the thumbnail or vice versa. They're supposed to work in tandem together. But yeah, it's supposed to open up a loop and get people to want to click. So you're not supposed to tell what the video's about. I'm supposed to, anyway, you guys know what I'm saying. So, all right, well, nobody wants to tell me what they want to see about. That's fine. Just one sentence, one word. You know what? I'm going to do a community poll. As soon as I'm done with this, I'm going to put a community poll and say what do you want to see on dividend YouTube channels or on mine, something like that. What do you not see enough? Would love to see you cover some blue chip stocks in emerging markets. That's interesting. That's something I don't know too much about, but I hope you're listening to Dividend Talk. With European Dividend Growth Investor also has a great YouTube channel. Definitely just type that in, European Dividend Growth Investor. He's over in Poland, in Europe, a big European guy. So definitely check that out. Oh, and for those of you watching still, my video, I think 2:00 my time, 2 or 3, I don't remember. It's going to be coming out. Obviously, I'll be away when it's going to drop. So basically what I'm buying in replacement of store capital. And yeah, it's funny. I'm working on the thumbnail this morning, I don't want to tell what it is. So I need people to get intrigued and want to click. But yeah, all right. Well, So be on the lookout for that. And next week, I think I'll try to do something a little more fun, a little more, because people that don't sell options and don't care about charting weren't going to watch this. They're not going to click. So, yeah, we'll see. All right. Anyway, I got my thing to go to, everybody. So, again, make sure you check out the Store Capital video, and I'll talk to all you all later. And again, thank you. Thank you for stopping on by. And bye-bye as we end